Welcome to The Deep Dive, where we cut through the noise to deliver the essential insights you need. Today, we're taking a deep dive into, well, a really dynamic sector, the intersection of technology, national security, and some seriously rapid market growth here in India. We're going to unpack the journey of Aditya Infotech Ltd, or AIL. They're a company that's truly at the cutting edge of India's security and surveillance industry. Now, our sources for this deep dive are exclusive excerpts from their maiden Q1 FY26 earnings call. So this gives us a pretty unique inside look, not just at their business, but, the broader forces at play in this critical market. Our mission for you, the listener, is to quickly grasp AIL's strategic transformation, understand the massive growth drivers powering India's surveillance market, and identify the key trends and opportunities shaping its future. Think of it as your shortcut to getting up to speed on a complex, fast-moving topic.
And it's so compelling right now, I think, because you have these significant aha moments that are really driven by very specific government policy shifts and some undeniable tech advancements.
Yeah.
It's fascinating, really, is seeing how regulation isn't just a hurdle here. It's actively resetting the competitive landscape, creating entirely new opportunities.
Okay, let's unpack this then.
Yeah.
Aditya Infotech's story, it actually began back in 1995. Pretty ambitious vision. Introduce futuristic tech products to India. For years, they were mostly a distributor, right, for big global IT brands. But then came what I'd call a really defining pivot. That was in 2007 with the birth of their own brand, CP+.
Exactly. That move zeroed in specifically on security and surveillance. And it wasn't just a minor tweak. It was a remarkable transformation, shifting them from just distributing stuff
To actually making things.
Right.
And building a consumer brand.
Precisely. A consumer brand-driven, innovation-focused manufacturer. That's the key shift.
So where do they stand today? I mean, the scale sounds impressive.
It really is.
Yeah.
AIL is now the largest provider of video security and surveillance products, solutions, and services in India. If you look at the numbers, they command something like 20.8% market share in FY25. That's substantial.
Wow, 1/5 of the market. And globally.
Globally, they're the third largest manufacturer of surveillance products in terms of units sold. It's quite the reach.
And this transformation, it was kind of capped off with their public listing recently, wasn't it?
That's right. Listing on both the NSE and BSE on August 5, 2025. That definitely marked a whole new chapter. Publicly traded, more visibility, more capital.
So quite a journey from distributor to, well, a market giant.
Exactly. And that pivot, from just trading to manufacturing and actually owning a brand like CP+, strategically, that's critical. It's the difference between being a reseller and a true value creator. Gives you much more control over quality, innovation, and, let's be honest, higher margins.
Right. And a big part of that manufacturing push was the joint venture with Dixon Technologies.
Yes. AI Dixon Technologies Private Limited, set up back in 2017. A 50-50 JV, specifically for making CCTVs domestically. That really cemented their Make in India commitment.
But AIL took full control of that last year.
They did. In September 2024, AIL acquired Dixon's 50% stake. So AI Dixon is now a wholly owned subsidiary.
What does that signal? And Dixon still holds a stake in AIL itself, right?
Yeah, exactly. AIL gets full control over its manufacturing destiny. But Dixon retaining a 6.6% stake in the parent company, AIL, that shows long-term confidence. It's like saying, we believe in this strategy, even if we're not direct JV partners anymore. A powerful endorsement, really.
And it supports that huge manufacturing plant they have.
Absolutely. Their state-of-the-art facility in Kadapa, Andhra Pradesh, it has an installed capacity of 1.5 million units per month.
1.5 million a month.
Yeah. It's India's largest single-location surveillance manufacturing facility. And third largest worldwide. It's massive. And this isn't just assembly. It's backed by serious R&D. They've got facilities in Noida, Ahmedabad, and they're even setting one up in Taiwan soon.
Taiwan. Interesting. For chip design, maybe? Or advanced components?
Likely for tapping into that advanced semiconductor and R&D ecosystem. It shows a commitment to deep tech, not just manufacturing scale. This integration of making things and designing them, well, it's fundamental to their strategy.
Okay, huge foundation. Now, let's get into the CP++ product portfolio. You said it's broad.
Oh, absolutely. Covers pretty much every customer vertical you can think of. Government, big businesses, small businesses, even homes.
So what kind of tech are we talking about?
Everything from your, traditional analog HD cameras, which still have a market,
Sure.
to advanced IP network cameras, Wi-Fi cams, 4G for remote spots, thermal for specific detection needs, even explosion-proof cameras for industrial sites, and, of course, cutting-edge AI cameras.
AI cameras are becoming standard now, aren't they?
Increasingly so. Plus, they do all the recording gear, DVRs, NVRs. They aim to provide the whole package, the complete bill of material.
Okay, but where does it get really interesting? You mentioned advanced tech.
Right. So in their professional range, think AI network cameras doing facial recognition, or cameras with incredible low light performance, for seeing in near darkness. Real-time video analytics is huge too, detecting specific events or patterns automatically.
Like what kind of patterns?
Could be anything from detecting intrusions, identifying abandoned objects, managing crowds, or even traffic violations using ANPR automatic number plate recognition cameras.
Ah, ANPR. That's big for traffic and security.
Definitely. They also have GPS-enabled mobile NVRs, specifically ruggedized for use in trains or buses, and body-worn cameras for police and security forces.
So really covering specialized needs. But what about the average person, the home user?
They haven't forgotten them. They've got a solid consumer home IoT range, smart Wi-Fi cameras you can check on your phone, 4G cameras if you don't have Wi-Fi at a location.
Like a vacation home or something.
Exactly. Or even construction sites temporarily.
Yeah.
And car cam, dash cams are increasingly popular for road safety and insurance.
And they provide all the bits and pieces too. Cables, power supplies.
Yep, the whole ecosystem. Cabling, power adapters, accessories. Plus, services built around it like CPPLUS cloud storage for recordings and their video analytics platforms, CPU AI and on-ML AI, IoT. It's meant to be a one-stop shop.
Comprehensive is the word.
It is. And that portfolio makes sense when you see how they segment the market. They've carved it into 4 key areas: government, enterprise, small, medium businesses, SMBs, and home.
Okay, how does the revenue break down across those?
Well, the biggest slice, surprisingly perhaps, is the SMB segment. That accounts for about 60% of their revenue.
60% from small and medium businesses. Why so high?
Strong adoption there. Think about all the shops, offices, small factories needing security. Plus, they've been really pushing their exclusive Galaxy stores. These are partner-owned franchise stores. Gives them great reach into that distributed market.
Makes sense. What about the big guys? Government and enterprise.
That chunk makes up about 30% of revenues. This is growing too, fueled by more participation in critical infrastructure projects, public safety deployments. They've had wins in banking and finance, BFSI retail chains, smart city initiatives, law enforcement tenders. These are often larger, more complex deals.
And the final 10%.
That's the consumer home segment, leveraging that strong CPPLUS brand recall. They sell these through online marketplaces like Amazon and Flipkart, but also traditional offline electronics stores.
So a really balanced mix, 60% SMB, 30% enterprise gov, 10% home.
Exactly, and that balance is really important. It builds resilience.
Oh, so good at large government or enterprise projects. They can have really long sales cycles. They depend on budgets, approvals. Things can get delayed.
Right, one big project gets stalled, and it hits your numbers hard. Precisely. But if AL sees a temporary slowdown in, say, big smart city projects, they still have that massive SMB engine humming along. Millions of smaller businesses constantly needing or upgrading security. That demand is much more distributed, less lumpy.
And the Galaxy stores feed that directly.
Correct. Plus, the home segment, driven by individual safety concerns, smart home trends, that provides another steady, less volatile stream. So they're not overly reliant on any single customer type. That diversification is key to riding out economic bumps or project delays in one specific area. Much more robust.
That's a really clear picture of their strategy.
Yeah.
Okay, let's zoom out now to the wider industry. India's video surveillance market, it sounds like it's booming.
Oh, it absolutely is, undergoing a period of really strong expansion.
What are the main things pushing that growth?
Several key drivers. One is just rapid urbanization happening all across India. More cities, denser populations.
Creates more need for security, naturally.
Exactly. Then there's a rising security consciousness. Both individuals and businesses are just more aware, more concerned. They want to feel safer, protect assets.
You see cameras everywhere now.
You do. And the third big one is significant government-led infrastructure spending, especially those safe and smart city projects you hear about. Huge investments going into public surveillance.
Are there numbers on the market size?
Yeah, Frost & Sullivan estimated the market value at around $106 billion in FY25. That's a big number.
And it's still growing fast.
Very fast. The projection is a TGR compound annual growth rate of 16.5% every year until FY30.
16.5% growth year on year.
Yeah. And in terms of units, it's expected to go from about 39.7 million cameras sold in 2025
40 million cameras
to potentially 75 million cameras sold annually by FY30, almost doubling in 5 years.
Wow. That's staggering growth. And you mentioned tech advancements making these systems more appealing, like AI.
Definitely. Advanced video analytics are getting smarter all the time, and generative AI is starting to play a role too.
How does generative AI fit into surveillance? Is it making predictions?
It's less about creating fake video, more about creating intelligence from the video feed. Gen AI can learn what's normal activity in a scene like a street corner or a warehouse floor. Then it can spot subtle deviations, anomalies that might signal a problem, things a human watching hours of footage might easily miss.
So, better anomaly detection, finding the needle in the haystack.
Pretty much. It helps filter noise, prioritize real potential threats. It can also boost accuracy for things like facial recognition and tricky lighting, or even summarize long recordings quickly. It's pushing surveillance from just watching towards more proactive, intelligent understanding.
Okay, fascinating stuff. Now, you mentioned policy shifts earlier. There's a big one impacting this market right now, isn't there? STQC.
Yes, the STQC mandate. This is a huge industry tailwind, and it's fundamentally resetting the market. STQC stands for Standardization Testing and Quality Certification. It's issued by MAIDI, the Ministry of Electronics and Information Technology, and it's really significant.
What does it actually mandate?
From April 9th, 2025, so very recently, all network CCTV cameras sold in India must be STQC certified. No exceptions for network cameras.
And the goal behind this, is it just quality control?
It's more than that. It's about ensuring devices are trustworthy first off. Good quality, yes, but also protecting user privacy and tackling cybersecurity risks. There was a big concern about low-cost, uncertified imports, often lacking basic security features, potentially vulnerable to hacking or misuse. This addresses that head-on.
So it's a quality standard, a privacy standard, and a cybersecurity standard all rolled into one, and a push for local manufacturing.
Absolutely. This creates a massive competitive advantage for Indian OEMs, original equipment manufacturers, who develop and make their products locally. Their stuff is just more likely to meet the STQC requirements readily.
And AIL is well-positioned here.
Exceptionally well-positioned. They boast the largest portfolio of STQC certified product lines already. They have that incredibly strong CPPLUS brand recognition. They have the biggest manufacturing capacity, the deep R&D.
And the distribution network through those Galaxy stores and other channels.
Exactly. All those pieces mean they are arguably best placed to capture maximum market share from this shift. They're expected to significantly beat that overall industry growth rate of 16.5%.
You mentioned it creates a vacuum. What happens to the non-compliant brands?
Well, they face major challenges. Brands that relied heavily on importing non-certified cameras, especially from certain neighboring countries, think Hikvision or even AL's old Dawa distribution business, they can't legally sell those network cameras anymore. Their existing non-compliant inventory is expected to basically dry up completely within this quarter. It's a huge structural change, clearing the market of potentially risky products and really boosting the domestic players who invested in compliance and local production.
Okay, that STQC tailwind sounds incredibly powerful for AL. Let's connect that to their actual performance. How did they do in Q1 of FY26?
Right, looking at the Q1 results, important context first. Q1 is usually their slowest quarter, seasonally. Typically, only 18–20% of their full-year business happens then. And this Q1, it also had limited initial supplies of the newly STQC-certified products. It takes time to ramp everything up.
Okay, so headwinds from seasonality and the STQC transition, how did they fare?
Despite that, they still managed consolidated revenue of 740 crore. That's up 16.4% compared to Q1 last year. Solid growth. Give the context.
16% top-line growth. Decent. But you mentioned profit growth was even stronger.
Much stronger. This is where it gets impressive. Their EBITDA earnings, before interest, taxes, depreciation, and amortization, grew by 47.5% year-over-year, hitting 64.9 crore.
Wow, nearly 50% EBITDA growth.
Yeah, and PAT profit after tax was up 46.1% year-over-year, reaching 32.9 crore.
So profits growing almost 3 times faster than revenue. That points to serious margin expansion. What drove that?
Several factors, and they seem pretty sustainable. First, the product mix is shifting heavily towards their own CPPLUS brand, especially post-STQC. That brand commands higher prices, higher realization. It's expected to be over 90% of sales going forward.
Okay, better product mix. What else?
The IPO impact was huge. Remember, they raised a 500 crore in August 2025.
Right.
Well, they used 375 crore of the fresh issue specifically to pay down debt. Their gross debt plummeted by 89% from 423 crore down to just 48 crore.
That's massive deleveraging.
Huge, and that means significantly lower finance costs hitting the P&L. That flows straight to the bottom line, boosting profitability.
Makes sense. Any other drivers?
Yes, the full consolidation of AI Dixon, their manufacturing arm, now that it's wholly owned, that brings some operating efficiencies and margin benefits. And finally, just basic scale efficiencies. As they ramp up production at that giant Kadapa plant, their per-unit costs should improve.
So, mix improvement, debt reduction savings, consolidation benefits, and scale. Seems like a strong recipe for sustained margins.
That's the expectation. It's not just a one-quarter blip. These are structural improvements.
Okay, so that explains the strong Q1 profit. What's their outlook for the full year, FY26?
They've given pretty ambitious guidance reflecting that confidence. They're forecasting consolidated revenue between 3,900 crore and 4,100 crore.
4,000 crore, that's over 25% annual growth, right?
Exactly. Smashing the industry's projected 16.5% growth.
And margins?
They're guiding for EBITDA margins in the 10-11% range and PAT margins around 6-7%, again, reflecting those levers we just talked about.
And are they doing more to shore up their supply chain, reduce reliance on imports? You mentioned R&D.
Yes, they're actively working on backward integration and more localization, trying to make more components domestically, things like the camera enclosures, housings, cables, connectors, power adapters, even looking into CCTV lenses.
Reducing import dependence. How much is imported now?
For critical semiconductors and some passive electronic components, it's still around 60-70%. But importantly, under STQC rules, those critical components cannot come from China. So they've already shifted that sourcing strategically mainly to Taiwan and US or other non-Chinese fabs, reduces geopolitical risk, and ensures they stay compliant.
Smart move. And they're investing more in manufacturing capacity, too.
They are. They've earmarked about 200 crore in capital expenditure over the next 2 years, mostly for factory expansion. The plan is to scale capacity from the current 1.5 million units per month up to 1.9 million soon, and then push towards 2.3 or 2.4 million units per month by early FY27.
Another big jump in capacity.
Yeah, and they expect this CapEx, this increased scale, to help them grow revenues by another 60% over the next 2 years. That's the kind of growth potential they see.
60% revenue growth potential from this CapEx. And any thoughts on exporting yet? The China plus one idea?
It's on their long-term radar. They see the opportunity. But right now, they're calling it baby steps. The immediate focus is very much on consolidating their dominant position in the booming Indian market first. Get that right, then look outwards more aggressively.
Okay, so a clear roadmap. Grow domestic share massively, leverage SDQC, expand capacity, improve margins. What are the main risks then? It sounds almost too good to be true.
Well, the key risk, as always with such rapid change in growth, is execution. Can they actually manage this massive ramp-up smoothly?
What does execution risk mean in this context? Is it keeping the supply chain flowing, managing demand?
It's really both. On the supply side, ensuring a steady stream of those STQC-compliant components, especially with the shift away from previous suppliers, requires careful management. They seem to have planned for it with the Taiwan-US sourcing, but it needs constant attention. On the demand side, it's about handling the expected surge as competitors stumble. Can their sales channels, logistics, and manufacturing scale up fast enough without hiccups? Can they maintain quality control at much higher volumes?
So managing explosive growth is its own challenge.
Absolutely. And navigating this STQC transition period smoothly is critical. There might be unforeseen bumps. But overall, their confidence in beating the industry growth rate seems well-founded, given the structural tailwinds from STQC and their own internal strengths, brand, manufacturing, R&D, distribution. They're not just beneficiaries of the change, they seem to be actively driving it.
And there you have it. What a fascinating deep dive into Aditya Infotech and this whole Indian security and surveillance market. We've really seen how strategic decisions, like that early pivot to branding and manufacturing, combined with strong financials and these major government tailwinds like STQC, wow, they're all converging, creating a really powerful growth story for AIL.
It really is a compelling case study. Seeing a company leverage policy technology and its own internal muscle to reshape an industry landscape. And it leaves us with, I think, an important question for you, the listener, to mull over. As India keeps embracing more advanced security infrastructure, pushing for Make in India through mandates like STQC, how will that ongoing delicate balance between cutting-edge technology, these national security needs, and the equally important considerations around individual privacy continue to evolve?
Yeah.
How will it reshape public life?
Absolutely. A crucial question with broad implications as this sector continues its incredible expansion. Definitely something to reflect on. Thank you for joining us on this deep dive. We hope it's given you valuable insights into this dynamic and increasingly important market.